Am I really looking to sell some of the hard-earned crypto I mined this year at a big loss? Stay tuned and let me show you why. Hey everyone, welcome to Crypto Mining Insider. I hope everyone's doing great and staying warm. It is brutally cold where I am. I'm actually located on the eastern seaboard of the US, so it is in the mid-teens Fahrenheit and well below 0 Celsius. And that's without the wind chill. Add in that wind chill and just it's like the ice age is coming upon us. So everyone, please button up and stay safe out there. And it is December 23rd of 2022. So let me begin by wishing everyone a very early Merry Christmas. And I wish you and your family a very happy and safe holidays. And today I have something really important that I want to talk to you about. And this is what I'm doing for my year end. See, I don't want to talk about any mining opportunities because let's face it, unless you have some of the latest mining equipment, there really is none right now. However, there's still a lot of work for me to do, and I'm talking about preserving what I've been working so hard to try to accumulate. And some of the coins I've mined this year, I'm looking specifically at Ethereum Classic. I've mined it even before Ethereum turned to proof of stake, way higher than it was right now. If I'm looking back over a 1-year horizon, let me just click year-to-date year. I was mining Ethereum Classic when it was, around the almost to 50 range. I was mining it too when it was in the low to mid 40 range, and I've actually accumulated a decent amount of it. I've sold some along the way, and some of it actually I sold at a gain. However, the problem is now I'm holding some Ethereum, hodling, which is kind of a 4-letter word sometimes, I guess in the bear market, because now look at it, it's down substantially, down to like 1641 at the time I'm recording, and I'm looking at this on CoinMarketCap. So wow, this coin is really taking a good beating. But maybe I can use that to my advantage. And that's because earlier in the year when I've mined some other coins and I've made some good profits, when I've sold it, I can maybe use some of the losses from this to offset that. So I'm specifically referring to tax loss harvesting. So there may be ways that I can use this loss to my benefit. And I just kind of really wanted to make everyone aware that, I'm saying, this is what I'm looking into doing. And I have to do this before December 31st, before the end of the year happens. So this video is really just kind of a friendly reminder for everyone to kind of get their house in order and knowing what they are with their crypto position for taxes. Maybe you'll want to look into, mitigating your losses somehow. But nothing I'm offering today is financial advice, so please do your own research. I am not a tax preparer or a tax professional or a financial advisor. I'm not here to give you any financial advice. I'm just here to share with you what I'm doing. And one of the things I'm looking to do is actually sell off some of this crypto that I'm holding, because although I mandated a good profit, now I'm going to be paying profit on, I'll be paying on the revenue when I mined it into the mid 40s or even low 50s. But rather than doing that, I'd rather maybe mitigate it and take some of the loss. And I'm specifically referring to tax loss harvesting. So, but before I get any further into the video, if you haven't already subscribed, smash down on that subscribe button. I really put a lot of hard work and thought into my videos, and hopefully it helps you, or at least sharing my journey gives you some insight. Before I begin discussing some of the articles and blog posts about crypto tax loss harvesting, let me give you a little bit of a background on my situation. I am a crypto miner, but crypto mining is my plan B strategy. I actually have a full-time job that provides my primary income for my household, take care of things, my bills. So, I'm able to endure these, I guess, more stressful situations better than people if they were just kind of locked in and just doing crypto mining exclusively. However, I am a legitimate business. So as a legitimate business too, I have certain expenditures. I have mining equipment. I've mined coins throughout the year, and some of them I've sold for a profit. So that would be a capital gain. And I'm going to have to pay taxes on those profits. So crypto tax loss harvesting is an opportunity for me to maybe reduce some of those capital gains by taking some capital losses. So let's look a little bit further at this article. So this is an article on coinly.io, Koinly.io. I'll be putting a link down below if you want to read this. And again, I encourage you, this is not financial advice. Please do your own research. So crypto tax loss harvesting. Crypto's tax loss harvesting investor's guide. Crypto tax loss harvesting can help you pay less tax on your crypto investments. It's legal, but there are some tricky rules you may need to know. So one of the key things is that tax loss harvesting is going to be different based on, I guess, the tax jurisdiction you're in. So if you're somewhere in Europe, if you're maybe in the UK, you're going to have a different set of tax laws and rules than I am here in the US. So definitely speak to a professional or get your research done specific to the area that you're located in. And that's where there may be some nuances and differences. So let me go into the article a little bit more. What is crypto tax loss harvesting? Put simply, crypto tax loss harvesting is an investment strategy that helps reduce your net capital gains and in turn reduces your tax bill for the final year. And here's how tax loss harvesting works. At the time, anytime you sell, swap, spend, or gift, depending upon where you live, a cryptocurrency, the tax office sees this as disposing of a capital asset, just like as if you sold a stock or a rental property. You make a capital loss or a capital gain from disposing of the asset. You can then calculate this by subtracting your cost basis from the price on the day that you dispose of the asset. So in the example case, if I mined some Ethereum earlier in the year, maybe I mined it up when it was $2,000 and I sold it when it was $2,200. I'll have a $200 capital gain above, the mining revenue too for it. But however, when I'm looking at the Ethereum Classic, like I was just showing you, it's currently trading down really low. So it's trading at 1636. So let's just say maybe I'll sell it, or I'm considering selling it maybe for about $16 if it goes down any lower. So maybe I was mining it at $45, and if I sell it at $16, I have a $29 loss per coin. Now I can use those losses to offset those gains. And that's the purpose of this. And that's the advantage of being aware of tax loss harvesting. Some other articles too is from Token Tax. So there's the tokentax.co. I'll put again another link below. There's a lot of links for this online. If you just Google tax loss harvesting in crypto, I'm sure you'll come up with hundreds of them. So these are not necessarily, the definitive source. This is just some guidance that I found online that I think it'll help me kind of explain this to you. So the 2022 Essential Guide to Crypto Tax Loss Harvesting. Crypto tax loss harvesting is a strategy investors sell assets at a loss during a market dip or at the end of a tax year to offset other capital gains, lowering their total tax liability. You can sell an unlimited amount of assets at a loss and may be able to deduct up to $3,000 a year to your ordinary income if your capital losses exceeds your capital gains. So wow, that's pretty cool. So where I'm located, I believe that's applicable. Again, it's going to be very specific for your area, so consult with your tax professional if this is something you're interested in. But I know when I was speaking with my tax advisor, he said to me, yeah, he said, if you have arbitrarily, let's say if you have $3,000 in gains, but you have $4,000 in losses, I'll be able to reduce my primary income by $1,000 as long as it's within that $3,000 threshold. So I do not want to give you any financial advice on what to do other than to say heighten your awareness and say, hey, if there's anything you need to do, if you're a crypto miner or doing some investments in crypto, now is the time you're going to want to do it before the end of the year, because anything I do after December 31st, it does not matter for this tax year for me. So I just wanted to share with you a high-level overview of tax loss harvesting and why I'm interested in it. It's great that when we can mine coins and we can make money, but at the same time too, especially in this bear market, I'm kind of running at a loss in many ways, and being able to harvest that loss becomes very attractive to me. And I just kind of wanted to share these concepts with you, but more so too is really to heighten your awareness that if you're going to be taking steps maybe to mitigate your tax situation, you're going to want to contact your tax preparer, your tax professional, as well as you're going to probably want to do it like me before December 31st when that tax deadline comes, because after December 31st, it doesn't matter. If I do it on January 2nd, the IRS will tell me it won't be relevant till the following year. So some other interesting questions that I even had too when I learned about this was, well, if I'm able to sell a coin that I mined at a loss and realize that loss, what's to stop me from buying that coin right back again? And right now in the US, I'm not aware of any limitation on that. I could be wrong. If I am, definitely put a comment down below. I believe there's some legislation being put in that'll prevent that. But similar to securities, like if you went to buy normally a stock or a bond, it's my understanding, if I say sold certain stock and I realized a certain loss, similar concept to this, I couldn't buy back that same security or a comparable one for a limited period of time, or else I'm really creating what's called an artificial loss. And that will all be covered under wash sale rules, and they're different based on your region and stuff like that. So once again, you're going to have to talk to your tax preparer or your financial planner, get some advice and guidance on that if that's something you want to learn more about. And as always, do your own research. This is not financial advice. So that about wraps it up for today. And I've actually reached out to some tax professionals. I've actually reached out to some attorneys too who are very knowledgeable in the crypto space and even retirement planning. And I hope to be able to have one on my channel very soon. So if you haven't already subscribed, make sure you subscribe. Press down on that subscribe button so you get notified of it. Because to me, we work so hard to make crypto. We find what's the best miner, what's the best coin, what's the most efficiency. But preserving that wealth is equally important. And for me, it was just kind of like a cliche thing. You know, people don't plan to fail, but often they fail to plan. So I just kind of want to heighten your awareness that if you have to take steps to maybe adjust or mitigate your situation, now would probably be the time to look into doing it, or at least be prepared for it. So that's what I'm doing. And I hope this video kind of helps you. So if it does and you've enjoyed this video, please remember to give me that big thumbs up. And don't forget to press down on that subscribe button. It's what really keeps me motivated in these dark and troubled times. But together we'll get through this. So until next time, stay safe, happy holidays, and I'll see you in the next video.